Good afternoon, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, the 4th of November, 2006. The market's just closed. I've got the S&P 500 on the screen. And on Friday, I was saying that it was looking like we were starting to see some big volume without further upside progress, which typically means distribution. And I think that a lot of people got stuck short based on that. A lot of people were looking at this market as being overbought, due for a pullback. Like I said, it didn't mean that we were necessarily looking for any short side opportunities. I thought maybe a little bit of consolidation. But this market once again proved to us why a bull market should be considered innocent until proven guilty. And with the 10-day moving average above the 20, above the 50, above the 200, they're all rising. We've got to consider this market to still be in a strong bull trend. So the people who are selling short uptrending stocks are getting hurt badly. And as we'll see, one of the stocks that we were short gapped up and ran very significantly today as well. And that's why we use stops. But the S&P 500, let's take a look at the 10-minute time frame. It was strong, late Friday afternoon. We saw a continuation of that. And again, I think that a lot of people got stuck short in there. And now we're up at new highs again for the year. So we broke past that initial little level of resistance up near 141 and 20 or so. And now it looks like that level's acting as a short-term area of support. This market just, you cannot fight the trend, basically. The semiconductors were what we were really looking for as far as where the weakness was. We saw a test of this trend line on Friday of last week, and that break came below the support at $34 a share. Now, Friday I said that it came right back up to that level, and I would only trust this market if it could get back above $34.30. So once it pushed past that level and back above this 5-day moving average, it became very clear that the short sellers were stuck in here, and from failed moves come the fast moves like this. Now, it doesn't mean that the semiconductors are in a bullish trend by any means, because we've still got this area where it did find resistance once again at the prior level of support at $35 a share. So maybe a little bit further consolidation near this level, and if it can recapture that 35 level, then we can start to look for higher prices. But right now on the daily time frame, it's just a big mess in here. It continues to be. And we've got a very choppy market environment, basically. And that's why we have to take risk management just one stock at a time. The Nasdaq 100 continues also to hold its uptrend line. It found support near that 20-day moving average. And this market isn't quite as strong as the S&P 500 rather, but it did get back up above that 44.20 level we're looking at. And now that 44.20 looks like maybe a little bit of support, but I think more importantly is probably down near this 5-day moving average at about 43.90 as far as support goes for the Nasdaq 100. We are still very extended, and that makes new purchases riskier up in this area. However, it's even riskier to sell short in this environment. We have such a strong runaway bull market. The mid caps, I was saying, I thought was the strongest group out there, and they did break significantly into newer high territory. I had suggested that this little inverted head and shoulders pattern might act as a continuation and area and give us a upward target. About 152.5, I believe, was the price target. And it's looking more and more like this market will breach new highs. In fact, it may have today, 49.19, 49.60, and 49.72. So intraday, it did make a new high. And on a closing basis for these weekly candles, it looks as though it's at a new high as well. Let's take a look back here at the daily closes, and back here we were closing at 149.10 or so. Anyways, it looks like we're closing at new highs for the mid caps, and it's really been a group that is the mid caps that we've been bullish on since back in here. And we had this one little shakeout, this one little scare that maybe the semis are doing something similar to this, where from this failed move comes a fast move. The difference is this market, meaning the mid caps, we had the 10 above the 20 above the 50, and they were all rising at that point. But that sucked the short sellers in, as did this one, and the short sellers just keep getting trapped on these moves. So The volatility is definitely increasing in the market, and I'm not talking about the VIX. I don't really look at the VIX. I don't find much value in the VIX personally, but the volatility in the individual stocks and the overall market seems to be increasing here, and that's why we have to continue to focus on risk management on the stocks, one stock at a time. And Boom is a stock that we were short. It did reach our target on Friday, but I suggested if you had just still been in it, that you wanted to lower your stop to $28.70, which it did hit today. So worst case, you should have been stopped out with a 65-cent gain. I got out of my puts in here as well. The market is just too strong to be making money with puts right now. Wet Seal, WTSLA, we got involved at 680. Our stop is at 695. I don't see any reason to change that stop. And the stock that reminds us today of why it's dangerous to short in a bull market and why we have to have our stops in place is this Kyphon, KYPH. We were short this stock last week. It looked like it was breaking down here in the daily time frame, but it gapped up. I didn't look at the news today. When it gaps up past the stop was at $35. I don't remember where it was. I didn't even write it down. But clearly, I think our stop was maybe 34.05 or something like that. It gapped up to 35.10, and this tells you why you've got to take that stop right away. You just got to rip that Band-Aid. It hurts. Take the loss and move on, especially in a bull market when you're short a stock. This stock just continued to rally nearly 9 points higher throughout the day. We were stopped out here with probably one of the bigger losers in terms of absolute points that we've seen in quite a while, but it was still only $1.45 on a $33 stock. So strong risk management is the key to survival in the market. You can be completely wrong on a stock like this one and still not get hurt badly and still be able to come back and trade again tomorrow. And that's the difference between a professional and an amateur. Gentex, symbol GNTX, we got involved in this one at $16.60 last week, on Friday, late in the day, and our stop was at $16.55. Let's raise that stop up to $16.78. And NFLD, we were stopped out of this one too with a 27-cent loss after we got involved at $15.51 on Friday. Calamos, symbol CLMS, we were short this one at $27.45. We had our stop at $27.40. So we got stopped out with a gain of a nickel in CLMS. The stocks I had mentioned last night were Biomet. I suggested buying that stock above $38.15. Should have been purchased right here this morning at that level. So our stop was at $37.85. Our target $39.25. Let's raise that stop to $38.60 right now. ISIS, we were also looking at. There was some news about a drug company, Pfizer, missing or pulling a drug that they had in development for cholesterol. That's the business that ISIS Pharmaceuticals is in, and the stock gapped higher, so there was no trade in ISIS today. PGNX, another pharmaceutical company, and this shows the danger of just looking at the headlines and saying, well, we don't want to be involved in pharmaceuticals because Pfizer's down. Pfizer's one company. It's not going to affect all the other companies. ISIS had a great day, and so did PGNX. Unfortunately, we were looking for a pullback in PGNX before we got involved. That never occurred, so there was no reason to get involved in PGNX. Or actually, there was reason to because it was going up, but we didn't officially take a trade in there. I suggested buying Sirius Satellite on a pullback to 422, and I had a question, wouldn't it make sense to buy on strength after the pullback? Usually that's the way I like to do it. For some reason, I chose to buy this one on the pullback today. I'm still in it. I had suggested a stop at $4.13 rather. So continue to maintain the stop there on Sirius. Crane, symbol CR, we were looking to short below 37.25. That never occurred. No trade was taken. And Teva Pharmaceuticals, here another stock you would have expected, hey, it's a pharmaceutical, so maybe it ought to continue lower. But it didn't break down below that 38.95, so there was no trade taken in Teva today.